India's goods exports seem to be in a bit of a downturn. After touching highs of between $37 and $40 billion per month in mid-2022, exports have fallen to $29 to $33 billion in the last few months. Actually, well, February is better than January, but overall, it's much less than what it was a year ago. Individual export items like textiles and engineering are still downbeat. Let's take textile exports first. They ranged between 15.5 to 17 billion last January to April. But now the monthly run rate is languishing between 12 to 14 billion dollars a month. That's the last 4 months. Likewise, engineering exports were ranging between 9.5 to 10 billion dollars last April, May, June, etc. But now, the last 4 months, last 2 months at least, they have fallen to 8 to 8.5 billion dollars per month. So lately, we want to know why this is. Is this just lower commodity inflation and therefore lower prices of finished goods? Or is it lower demand in countries that could be seeing recession? How is the order pipeline looking for the next few months? For all these questions, I have with me two experts. Ajay Sahai, the Director General and Chief Executive Officer at the Federation of Indian Export Organizations, and Dr. Sakthivel, who is the President and Honorary Chairman at President-FIEO and Honorary Chairman at the Thirpur Exporters Association. Gentlemen, thank you very much indeed for joining me. Mr. Sahai, if I could start first with the overall picture. Are we right in worrying that exports are slightly lower than what they were a year ago?
No, in fact, you are right. If I'm looking into the global demand has come down. 2021 was the best year for international trade, where the trade itself has grown up by around 25%. In 2022 also, we started very good in the first half, but global trade has slowed down in the second half. Secondly, the commodity prices have also softened up, and much of India's exports is of the commodities also, whether we are talking about petroleum, iron and steel, aluminum, copper, cotton yarn, raw cotton. So A, the demand has definitely come down, and B, the price of the inputs have also gone down. These two have definitely affected the exports. And of course, we are expecting that in the third quarter, as per the recent projection, the global trade may little recover, but the challenges on the global trade continues. But I think at the same time, we should also be very conscious of the fact that our share in the global trade is still very moderate, and therefore we should not be much bogged out by these kinds of trends. Of course, it's a cause of concern. But
Mr. Sahai, I'll come to the future order pipeline in a minute. I just want to assess the numbers that we already have up until February. Mr. Sakthivel, in particular, I wanted to ask you about textile exports because although engineering exports is the single largest entity, textile employs the largest number of people. And here again, we are seeing a good $1 or $2 billion less per month in the last 2 months compared to what it was a year ago. Is there a problem of price or volume?
Ms. Lada, the textile export, if you see the segment-wise, the raw material and the fabric export has slowed down, whereas apparel export is up, finished product. This is because the last year, the raw material price of cotton went to sky high. Now this year, from starting itself, the cotton price have come down, and also the fabric price because of that has come down. Moreover, the demand for the cotton from the other countries also come down. But whereas we utilize the cotton ourselves in our sector. So in textile, if you see that except the raw material and the fabric, if you finished product is gone up. So that shows that the employment is giving for the finished product only. So we are happy with the export of apparels. Of course, this raw material down is, we are not at all worried because we want to utilize the raw material ourselves at export.
Okay. Let me get that annual chart again. We were just showing from 2017-18 to 2022-23 the exports. If we can bring that table up again, textile exports. Yep, that's the chart. Dr. Sakthivel, you know, what we are seeing is, even on an annual basis, we were doing $16 billion before COVID. Now we are doing around $14 billion for the full year. I mean, we are not able to show, is it a volume problem also? Are we not able to increase the volume of textile exports?
No, but this year we will definitely be touching in the March 17.5 to 18 billion apparel exports.
Okay.
That's
Yeah,
no doubt
these are
about
11 months.
because-
Yeah, these are 11-month numbers.
Level months. So we will definitely achieve this 17 to 18 billion. So actually, the world was going minus. Even the WTO forecast is only 1% growth. But whereas we should be happy that our Indian export is service and manufacturing together, we are doing about 15% more than the last year. So last year we achieved about 672 billion. But I am very confident that end of March will be 100 billion more than the last year. We'll be doing around 775 billion for definitely.
That is the overall. I agree. The overall exports is very good because of service exports. Now, I wanted to speak about that as well, Mr. Sahai. I really wish I had put the numbers up. Service exports have done exceptionally well, and we are told that that is only partly accounted for by software. What are the other services that are doing well, non-software?
No, in fact, in other services, the financial service, audit and accounting service have done exceptionally well. Unfortunately, since the COVID restrictions are still applicable and the global transportation is still a challenge, we hope that probably next year we will have better numbers coming from travel and tourism sector, and more importantly, the medical tourism sector. On the services front, we still can clock around 30% plus growth, but we have to be very conscious of the fact that if I'm looking into the services trade, they just constitute roughly 25% of the global overall trade. 75% is still accounted by the manufacturing sector. So while in services sector, we will continue to do well, I think our focus should be on also pushing the merchandise sector despite all the challenges. I personally feel there are two factors which will be very important from long-term perspective. A, that we are seeking the realignment of the global value chain. And with reshoring, nearshoring, and friendshoring, probably the global trade itself will continue to slow down. And secondly,
Mr. Sahai,
the focus on the green product will
Mr.
a
Sahai,
challenge for all of us.
I take your point, sir. I'm more interested in the here and the now. How policy should change, we cannot do in a 10-minute, 12-minute discussion. I just want to know how things are in the pipeline. So services other than software, you're saying accounts and audit have done very well.
And so are the other financial services.
Okay, financial services. That's something we have not explored enough because we were running after software, and software has grown steadily, but not much. Now, Dr. Sakthivel, the other issue that comes up when we talk to exporters is the rupee trade. Are people able to trade in rupees with any country at all?
Still, it's not done because still we are talking about the rupee trade, especially if the rupee trade starts with Russia. Definitely our export to Russia will be our 30% growth rate. So still the mechanism is not worked out fully. So we are looking for that it should be, because now Indian banks are ready, but still the counterpart Russian banks are not ready with the rupee trade. So our government of actually Mr. Commerce Minister Piyush Goyal is trying his level best to start this rupee trade very soon. Once the rupee trade starts, then we have a real good growth rate in countries like Russia, Iran, and other places. Okay. So we are looking forward to this rupee trade.
You mean nothing has been done so far in terms of a rupee trade? Okay, not with Russia, but have we managed with the Middle Eastern countries, with Sri Lanka, with Iran? Have we done any rupee trade at all?
So we have done a little bit, but it's not sufficient because the banks are not coming out completely to negotiate and give the rupee. So there's a problem. One bank is doing we have accounts with or we have taken the limits with the other banks. So the other banks like Slashlight and Private Bank of India, they're not ready with the rupee trade mechanism.
Oh, okay. The banks are not ready to, ready with the rupee trade. But are your buyers ready to accept rupees?
See, but Russian buyers and Iran buyers and other countries, of course, Europe and USA, they're not ready. But
sellers,
other countries, other countries are ready to do the rupee trade with us.
Okay. Mr. Sahai, now if you can give me some idea of how the next few months are looking. What is the order pipeline for any of the products, particularly engineering, because it's 25% of our total export basket, but for overall as well, what is the visibility?
So in fact, when you are looking into the engineering export, let us also recognize the fact that there were a lot of restriction on in some of the raw material export. For example, we have a very high duty on iron ore exports and certain varieties of steel also, which has only been relaxed recently. So probably the engineering exports will also do well. I'm pretty sure that in next quarter or so, we will be having some more growth in the engineering sector, and particularly in the high-end engineering product. The demand for high-end engineering product is growing, and that's a very positive sign for India. Let us also recognize the fact that global trade is moving towards technology-driven sector, including high-end engineering, and electronics sector. The good news for India is that in the PLI, we are covering all these critical sectors of manufacturing. And we are of the view that a significant portion of production coming off the PLI will go into the exports. And we have seen that particularly in case of mobile sector and some of the white goods electronic sector also. So I'm very conscious of the fact that
I agree with you on PLI.
To have challenge.
Yeah, Mr. Sahai, I agree with you on PLI. See, we have put up the board on total exports, on the February exports. That table should come up again. Even if it is a red arrow for other products, in electronics, we are still in a green arrow, a good 29% higher than year-ago levels. But the problem here is that we also seem to be importing a lot. Am I right in understanding in some of these areas, like PLI sectors especially, the imported kits are so much that we seem to be value-adding less? Is that fair? Yes, exports are growing, but so are the imports.
You are absolutely right. The imports of parts and components are growing. I think we will take little time to develop those domestic capability. We are seeing that even in the mobile sector, gradually value addition is going up. So whenever you are attracting a large companies in India, please bear in mind that in PLI, we have the local content restriction also. So over a period of time, these companies will be definitely procuring more from domestic market, and that's why where we feel that SMEs can play a role. We have seen that happening in case of the automobile sector, and probably that will be the trend in electronics sector as well.
Fair enough. Mr. Sakthivel, I wanted your view as well on the next few months. What is your industry people telling you? Are there order books enough for the next couple of quarters?
Yeah, see, the thing is, I was there last month in USA. We are having the show in the Magic for the garments as well as B2 meeting. We could find that buyers have started coming into the Indian pavilion more than the last year. And the plus one factor also giving a good advantage for India. I am very confident that coming months, our India exports will increase. And also there is a good thing is that as we are discussing about today, that rupees comes to the transaction. I believe that once rupee transaction comes, our export to all these countries which I mentioned earlier will increase maybe with a 30-40% growth rate. So I'm very confident that this manufacturing export also will increase. The PLI scheme which we have talked about other sector, now it's going to come in the PLI scheme 2 for the apparel sector, where we are going to encourage more MMM garments and other small manufacturers, because this PLI scheme, they're going to allow for the small manufacturers. So far, they were talking about the champion of champion. Now, even with the 30 crores investment, government is thinking this PLI scheme for the apparel sector. Okay. So this all...
So you're confident of textile exports? You're confident of the order pipeline in textile exports for the next couple of quarters?
Not only that, in other exports also, we are I'm talking to other sector also. We are all confident that the next year is going to be a good year for the
good year. Exports. That's good to hear. Just a final quick question, Mr. Sahai. This financial sector service exports, is it largely by the big four or is it a more widely dispersed export?
It is, of course, largely by the big four, but many of the Indian companies have also chipped in. A lot of back office work is also being done by the new entrepreneurs also and the startups also. So entirely, if you are looking into the 75% of the total trade, it is by the big four, but 25% has been taken by the small companies and the startups. And going by the trend, I'm pretty sure in next 2 to 3 years, you will see their share going up to 35%.
Okay, this is very, very good news from both of you. the optimism at the export front. I was just worried that you would be talking about recession in the destination countries like US and Europe. But clearly it doesn't seem to be bothering you at all. So it looks like we have a good run on the export front. Thank you very much, Mr. Ajay Sahai and Dr. Sakthivel, for joining in this conversation. We have to wrap up on Bazaar. Chartbusters up next.